Welcome to Front Range Facts. This is Anthony Meisner.
And this is Jim Marion.
We're here to bring you your national market update for the month, so let's dive right in.
Yeah, I wanted to cover some of the market trends that are going on in the marketplace right now. First, by looking at where metro prices, 50 largest metro areas, prices have fallen, and some have risen in others. And a lot of it comes down to what region of the country you're in, right, Anthony?
Yeah, and this is really the first time we're starting to talk about true price drops in the marketplace. So, this compression in the marketplace. But 22 of 50 of those markets, Denver being one of them, that we spent a lot of time in here, it's not looking as good as it did before, that's for sure.
Yeah, there's certainly a correction going on. And just to see where this is distributed from a visual perspective, the purple ones are where there's been price drops. The orange ones are where the prices are actually increasing somewhat. So as you can see, that regional theme, the Midwest, the Northeast, being very, very resilient in this marketplace, whereas the South and the West both are suffering a bit with prices.
Right. It's very similar to what we've been talking about, for the last year or so. It's very interesting in the Northeast how little inventory they've had, which has kept that price resilience.
Yeah, and this is where the sales come into play of single-family homes. So, here you can see back in 21, we peaked at about 6 million homes that were sold that year. And, pre-pandemic, we were bumping around in the fives. And here you've got now struggling to break that 4 million mark right now. So it's quite a bit less than it was, and it's certainly below historic averages.
Absolutely, it is. Now, if we talk about the month supply of family homes on the market, so if nothing else comes on the market, how long does it take to sell everything we have? That's the definition of month supply. We're flirting with 4.5, 5 months of inventory right now. We haven't seen those levels since 2016.
Yeah, we're back to there. And it's even worse than when you get to the condo market. Here you can see that, we're trailing even worse. Sales of condos, basically 350,000 condos sold on an annual basis, seasonally adjusted. And, at the peak, 750,000. So it's a little bit grimmer than that on the condo side. And you're seeing that, of course, with the month supply of inventory, actually over 6.5 months supply of inventory. So about 2 whole months more than it is on the single family home side. So this market just nationally is really struggling, and a lot of it's concentrated in the Southeast.
Absolutely. Now, check out this one, active listing count on the market. I think the one thing that's really interesting is we haven't quite got back to those pre-pandemic levels. So as we start to see that rise, as we have for the last 3 years, we've been digging ourselves out of the hole we created during the pandemic. And here we are for the first year, kind of getting back on track with over 1 million active units on the market. But we still really, if you look back at this, are not back to the 2019 levels yet. So this absolutely is going to continue to rise.
And buyers, this is why your prices aren't dropping, really. When it comes down to it, there's not a lot of people that are motivated to come on the market. And just to put this in further perspective, in 2008, there's about 4 million homes on the market. We're scraping around 1 million. So it's 1/4 of that. So there's no oh my God, we're going to get such great deals in a year. No, it's not going to happen. Pretty much flat is kind of where things are at. They're going to stay.
Absolutely. And you can see here in the pending listing count year over year, depending on the market you're in. But if we look at nationally from Realtor.com, you're about 3% change down year over year compared to where we were. You can see really from 22 to 23 is where we lost the vast majority of our steam. It's been very similar since.
And this is where you can see basically there is a mild recovery. Yes, we're down 3%, but 23 was where it was the biggest trough of pending listings dropping. We're scraping around that zero neutral kind of level pretty closely, and we're starting to see recovery where things are at.
All right, so let's talk about buyers and sellers and the imbalance that's taking place.
Yeah, there's a lot of things that I think go into this idea of an imbalance between buyers and sellers. One thing that puts us into perspective, I think, is just, property taxes have increased, interest rates are high, property values are very high. And what that all means is that millennials now own less than 2/3 of the real estate that baby boomers did at the same age. So you can kind of see where the distribution is right now of who owns what and what age and how much share they own. But I think the big takeaway is that the younger generations as a homeowner class own less than their peers did when they were of a similar age.
Buyers and sellers domestically have shifted too. And I think the last time we've seen a market that was fairly out of balance, where way more sellers than buyers were in the market, was back in 2014 and 15. And it really corrected quite quickly. And we are definitely not in that position now, right?
Yeah.
Sellers are nearing 2 million active on the market, and the buyers are only 1.5 million.
25% more, buyers or sellers than buyers right now. So, it's significant.
Yeah. All right, so the median price existing in single-family homes, you're basically seeing this. Look, we peaked out in 2022. 2023 never quite got there as far as our median, but we really have still seen house appreciation as far as the median is concerned for every year for a very long time. I think the one thing that you need to take away from this slide is it a good time to buy real estate? Absolutely. You should own real estate, right? No matter what happens, even in a market like this, we're not at 4 million homes on the market, right? We're at 1 million homes, and it's a good time to own real estate.
Yeah. And, since we're talking about imbalance, we were just talking about how prices are still high, and that's discouraging buyers a little bit, but, it's always going up, it seems. So now it's time to get in. But the percentage of buyers who have been surveyed that said, what interest rate will motivate you to become a buyer again in this marketplace? 54% right now are saying that there's not an interest rate that exists that would make them comfortable. So that's where this comes back to. There is an imbalance, certainly. There's sellers have expectations they're going to sell, and then there's 54% of people out there who are buyers who aren't actually motivated at any point in time right now because the sale price has gone up so high. But the takeaway here is that most people really need to be under that 6% interest rate. And that's historic too. Like that is what economists say really needs to happen to get, buyers motivated to purchase, is getting those interest rates down to below that 6%.
This one's interesting because if you look at by metro area, nationally, basically what it's saying is the average family needs a $17,000 raise to afford the median home value, yes. Right? And their payment would basically be $1,922 a month. Well, they need to make $80,000 a year to have that, or will they actually need to make closer to $100,000 a year to make that, right? Well, if you look at all the rest of these metro markets, LA being the most out of whack, where people need $150,000 more a year
yes,
to
they're making
afford
right
the $1 million house.
Right. Yeah. So instead of $98,000, they need to be making $250,000. Yes. Denver, right now the median income is $109,000, and they have to have about a $44,000 raise.
Right, $150,000 to get to
again.
The
this imbalance is clear in a lot of different ways of looking at it.
Right, so that's a lot of why I think you're starting to see some of that compression in pricing and just that downward pressure. Without interest rate relief, this isn't going to change.
Yeah. And then, regional activity, this is a way of looking at, this imbalance we talked about too in marketplaces where the Northeast and the Midwest really don't have a lot of active, extra listings. But, when you look at the West, you look at the South, there's a surge of active listing counts that's, exceeds what, the other ones do. So in the South, you've got or in the West, you got about 33% more active listings, as well as then in the South, 25% more.
All right, so this one I found interesting, mainly because Denver is really leading the charge here, and this is not a good thing to be leading the charge in. Increasing time on market versus price reductions, yeah. And we have, across the nation, you can see the Northeast is really where we've seen prices stay resilient. It's in that bottom quarter. The top quarter, where you got Las Vegas and Nashville and Austin and Denver and Phoenix, there's just a lot more time on market, and it's creating that price compression in these marketplaces.
Yeah, so Denver actually leads the pack with price drops. So the amount of people who are dropping their prices shows that maybe we're a more motivated market from a seller perspective than others, but we're also time on market is one of the highest. So it's certainly not the quadrant you want to be in. That top right is a lot of times that quadrant you want to be in, but not in this case at all.
All right, so let's talk about new construction trends. This one's always fascinating. We've been covering this.
Yeah, it's really a push and pull between resale homes and new construction every year. And, the inventory for new built homes continues to rise. So, again, a balanced market, 4 to 6 months, where both sides have buyers and sellers have about equal weight. Well, here you can clearly see buyers have a lot of weight to throw around when it comes to new construction. 9.8 months of inventory right now with new construction. It's pretty significant. That's a lot of weight on the balance sheets. And that's why 57% of new home communities in May are offering incentives on to-be-built homes. So that's like buying dirt and saying, okay, build on it. And 57% are getting an incentive for that. And then 75% are getting an incentive on those quick moving ones, the ones that have already been built, they're built on spec, or a deal fell through. Yep. Hey, we can sell this to you tomorrow. So you got some options as a buyer.
You absolutely do. And new home buyers are getting increasingly larger mortgage discounts than the other buyers.
Yeah, so
it's kind of a confusing way to say that, but essentially they're getting a better interest rate than if you're going to buy an existing home.
Yeah.
And that has changed so much to the fact that it's about 0.5%.
Yeah.
Right? That delta's huge.
It's pretty significant. Yeah. Instead of like a 6.5%, you're getting a 6% interest rate. So
yeah, that one's good. What about more builders are cutting prices, right? We see this every year right now because it's obviously been harder and harder to sell homes as we have more inventory in the market, but
just seeing this step up from the spring where 1/3 of buyers basically or home builders were dropping prices. They don't like to do that. They like to do incentives. They don't like to chip away at what the sale price is because it impacts then the future sales and gets the people who bought earlier pretty upset with you if you're dropping your prices. So having 37% now of builders cut prices
and incentives
is very interesting. A very good time to be a buyer if you were looking at new construction. And of course, the permits for new construction have been dropping because builders are sitting on so much inventory, and they're like, well, we're not going to build as much as we should. And it's unfortunate in a lot of ways because at the end of the day, there is 4 to 6 million homes deficit that we have in this country for the amount of people that we have. Yet builders are really pulling back now on what that's going to be. So that means that next year you're not going to see as good of incentives for builder product and things like that.
All right, so what to expect in the second half of 2025 when we rub that crystal ball?
Yeah, well, we're wrapped up the first quarter, so let's look at what the second quarter really looks like. And the forecast for home price changes, this would be like, when you look back in January at what 2025 did, how much did home prices go up? Well, right now, we're at a couple percent increase. So is that going to continue? I sure as heck don't think it's going to be 4.1% because most of nationally, the prices rise in the first 6 months of the year for the most part.
They do, in fact, and this gives you a way better breakdown. The one that really caught me off guard here when I read this was Redfin and Zillow became very negative very fast about this market. And then Fannie Mae did the exact opposite. Mm-hmm. And I don't understand how Fannie Mae came up with, well, prices are going to increase faster by 0.5%. And then Redfin made a 5% adjustment. Yeah. I mean, they were wildly overvalued when we were looking at this, 6 months ago. Mm-hmm. And now all of a sudden they're the most pessimistic person in the room.
Yeah. And, NAR, saying originally 2%, now they're saying 3%. I think we'll be, right around that, 1% type of increase by the time it's all said and done. But what do we know?
Yeah, what do we know? The average of all 8 seem to be fairly close when we look at them. I think that's probably why everyone reports on it all, right?
Yeah.
Now, tracking U.S. inflation, check this out. We are at 2.7% for the last 12 months in June. This is what we've kind of been watching as far as what it's going to take for interest rates to change, right? The Fed makes a lot of their decisions based on inflation and unemployment. And, well, inflation hasn't really changed, right? Mm-hmm. We've been really tracking this. We've been really pushing on this. We've been really watching it. And in order for interest rates to really start to come down, the metric number is 2. Right, 2 is where we're trying to be.
You look at the slant that says 10-year average is 3.2%, but that entirely happened over a 2-year period of time where it just bubbled up. For the most part, it's been below.
Yes, look at the last decade before the pandemic, and we were right around 2 all the time. Right, It obviously went up and down a little bit. The other part of this is there's so much inventory on the market. It's such a buyer's incentivized market. The one thing that we're seeing nationally is just so many more listings that have price cuts, right? Mm-hmm. And obviously, if the Northeast is doing really well, this is very unaccurately represented across the nation, right? Yeah. This is much more in the West and in the South where there's more inventory. So there's a lot of price cuts, 26%. It's another 2% above this time last year. So that one's a little concerning.
Yeah, and then just, to touch upon kind of more of these, impacts of the macroeconomics. Right now, we have actually a positive GDP that was just recently announced for the second quarter. Yet, this is the Q1 rate, which was a negative GDP for 0.5% GDP, I think, gain. So, 1 quarter of kind of exhibiting recessionary things. But you can see where it's all concentrated, the good stuff, the increase in GDP is basically in the red states. For the most part, you got Utah that's benefited a bit. Michigan also, went red this past election. So Pennsylvania, they're all red. So it's a very conservative, dominant type of GDP that we're seeing here, and the rest of the nation is really getting slammed.
Yeah, they really are. Now, look at showing traffic because Jim and I always watch this to see what's going to happen in the next 60 to 90 days as far as buyer behavior. The interesting part is we still have a lot of showing traffic on a national level. Now, when you compare this to some of the Western regions, I think this is heavily weighted in the Northeast and in the Midwest. You can see that, but there's definitely more buyer activity than we've seen in the past couple of years. I do think that's a promising sign. So maybe a little bit of light for the real estate market there.
Yeah, and then, looking at now what some of the largest metro areas have, prices in 19 of the top 50 metro areas have prices that are below the 2022 levels. And, when you look at Denver, for example, prices basically since the peak of, July 22, prices have gone down 7.7%. But more importantly, over half of that, has been just this year, that 4% that you're seeing year-over-year change. So most of this has been happening right now in 2025 as far as price corrections go. But overall, you are seeing close to an 8% drop in prices since 22 in the Denver metro area. So 3-year time, prices have corrected about 7.5%.
Thanks for joining us today for our national market update. This is Anthony Meisner and Jim Marion. You can always reach me at 303-968-9868 or ameisner@ltgc.com.
And I'm Jim Marion, realtor at Coldwell Banker. Give me a call at 303-548-0243 or shoot me an email to jim@ourcoloradohomes.com.
See us on the show, and our Colorado update's coming next. We also do a local market update, and you can get us at frontridgefax@gmail.com. Have a great day.
Take care.